Hey, everybody, we're going to talk about one of my favorite companies, SoFi. They just reported earnings and had an absolute blowout quarter. As I'm watching this, the stock is up 20% after earnings, and we're going to get into the numbers in just a second. Before we do, please take a minute and check out the link you see on your screen for a message from my sponsor, The Motley Fool. You can get the top 10 stocks to buy right now, and it's the best way to support this work we're doing on YouTube. So let's get right into it. SoFi achieved profitability, GAAP profitability, for the first time ever in the fourth quarter, as it said it would over and over again, but the market didn't seem to believe it. The company's adjusted EBITDA was the highest ever. 30% adjusted EBITDA margin is about what SoFi wants for its long-term goal. And for the first time, all three of its business segments, lending, financial services, and the technology platform, the Galileo business, they all achieved positive contribution profits. So looking a little bit deeper into the numbers, SoFi's members. So they ended the year with over 7.5 million members. A member is a customer. Someone who has at least one financial product with SoFi is a member. That is up 44% year over year. They added 585,000 members in the fourth quarter alone. Now, this kind of is really significant because it creates a natural marketing funnel, especially since most of the growth is happening on the financial services, not the lending side of the business. You can see here that the ratio of financial services products to lending products keeps getting bigger and bigger over time. One of my biggest complaints with SoFi and one of my biggest concerns with it as an investment is its high customer acquisition cost, especially on the lending side. For example, they offer something like a $300 referral bonus if you refer somebody to get a personal loan with them. Now, that's a high acquisition cost compared to other lenders. And SoFi, as it gets more people in its financial product ecosystem, which is checking and savings accounts, brokerage accounts, credit cards, etc., as it gets more people on that side of the business, it creates a natural cross-selling funnel that it can market its lending products to its existing customers, cutting down on that acquisition cost and greatly improving efficiency. So really impressive growth there. I mentioned they added a lot of products in the quarter, most of them on the financial services side, but still the lending business is doing well. They added almost 700,000 new products in the fourth quarter. Again, a product is something like if someone opens a credit card, that's a product. If someone opens a checking account, that's a product. 40% of their revenue is now from outside of their lending division, which is a nice milestone to see. Historically, SoFi has made most of its money lending, and its tech and financial services platform haven't contributed a whole lot. That has changed significantly over the past couple of years and continues to make up more of the company's business. But there are still a lot of cross-selling opportunities. If you look at the total number of SoFi products to members, the average member has about 1.5 products with the brand. So either one or two on average, the average person would have either one or two products with SoFi. This creates a lot more future opportunities for cross-selling. Right now, SoFi's focus is growing its membership base primarily, but cross-selling is a big opportunity. It offers its members incentives to, apply for a loan, to get a credit card, things like that. So there's still a lot of opportunity to grow within its current member base, not to mention just the fact that its member base is growing by hundreds of thousands of people every quarter. Net interest income, since SoFi is a bank now, they've been a bank for 2 years now. Net interest income was up tremendously, 116% year over year for the full year 2023 compared to 2022. That's fueled from a combination of growth in its lending business as well as higher interest rates. Interest rates have gone up tremendously over the past 2 years. SoFi's net interest margin is just over 6%. Most banks would be happy with about 3%. SoFi has a lot of high margin products. Its average interest rate on a personal loan is about 13.8% right now, and that's the bulk of its lending business. So it's got some high margin products, even absorbing a bit of a default rate. Its personal loan default rate is something I'm keeping an eye on. It's at 4.8% right now. That's relatively high. Still leaves a lot of room for profits, but it's a bit of a concern right now. It's still a very high margin business, and the numbers are reflecting that. On the deposit side, deposits are continue to grow very impressively. SoFi added about $3 billion of deposits to its base this quarter. Now has just under $19 billion of deposits altogether. And keep in mind, this is a bank that just became a bank at the beginning of 2022. So that was starting from zero, and 2 years later, it has almost as much deposits as it has loans on its balance sheet. This is very significant from a profitability standpoint as well, because the more of its deposits or the more of its lending portfolio that's covered by low cost deposits, the less money it has to borrow. SoFi said in its fourth quarter earnings report that the average interest rate that it pays on its deposits is 218 basis points. That's 2.18% lower than its warehouse facilities, which is essentially its cost of debt. So it makes a big difference when SoFi can use deposits to cover its lending growth as opposed to borrowing money. So keep watching that number. As the deposit base gets bigger, this should become an even more efficient business. On the investment side, they continue to roll out new products. They just, for example, announced that mutual funds will be available to SoFi investment customers, which is very significant. That's everyone knows you can open an account with like a Schwab or Fidelity and buy mutual funds, but it's kind of rare in the app-focused investment world. Robinhood, for example, doesn't offer mutual funds. Webull, for example, doesn't offer mutual funds. So this kind of is a differentiator as far as app-based platforms go. And SoFi announced that it's gonna give its investment customers access to some alternative investment vehicles like venture capital funds that have a lot of pre-IPO companies in them. Really exciting differentiators on the investment side that should help drive growth even further. And the company's outlook, last but certainly not least. Um, so I mentioned SoFi achieved GAAP profitability for the first time in the fourth quarter. The big question on investors' minds going into this, well, is that just going to be a one-time thing, or is this going to be the first of many quarters of profitability, hopefully? And it looks like that's going to be the case. So for 2024, you can see the numbers right there. SoFi expects its lending business to kind of contract a little bit. Not terribly surprising. Um, SoFi's been in all-out growth mode for a while, so its lending business isn't going to grow quite as much as it has. It expects lending revenue at about 92 to 95% of 2023 levels. It expects its tech platform and financial services platform to collectively grow by about 50%, which I think was a very positive surprise for a lot of people. It expects its expenses to remain relatively flat, excluding interest, because that's really not very predictable or within its control. And it's expecting full year net income that's GAAP profitability of between 7 and 8 cents per share for the full year. Not tremendously profitable, but that's okay as long as they're growing their business at a 40 to 50% rate. Um, any profitability is impressive. They're expecting at least 2.3 million new members in 2024, which, to be fair, that could be somewhat of a disappointment to investors. CEO Anthony Noto had said previously that they wanted to do 1 million members per quarter. Times four would be 4 million new members, so that might be a little less than people were expecting. But in my mind, is still very impressive growth. And the company actually did something kind of rare and issued guidance for beyond 2024, saying they anticipate growing at a 20 to 25% annualized rate through at least 2026. And that assumes no significant new product launches, which is unlikely. And by 2026, the company expects between 55 cents and 80 cents per share in earnings. So that means that the stock trades at not that big of a multiple to its future earnings if it can achieve this. And remember that SoFi has a very strong history of under promising and over delivering. So I would say I'm not counting, there's a lot that can happen between now and 2026, obviously, but I wouldn't be surprised if it came in on the upper end of that range. And this is even beyond 2026. They're expecting 20 to 25% annualized earnings per share growth for the foreseeable future. So all in all, this was really a blowout quarter for SoFi. I was very excited and happy to see these numbers. I'm very happy they achieved GAAP profitability like they said they would. SoFi isn't one of my largest positions, but it's definitely up there, especially in terms of my growth investments. I'm definitely more of a value investor at heart, but I make an exception for this one. And it's one that I will probably continue to build out my position as long as they keep performing like this. I'd love to hear what you think. I will do my best to respond to any of your comments individually and hope you enjoyed this. Once again, thank you so much for joining me. Be sure to click subscribe if you don't subscribe to my channel already. And as always, this video is sponsored by the Motley Fool. Be sure to visit www.fool.com/Frankel to receive the top 10 best stocks to buy now.